Hello students, this is Mr. William, Upelcom College. I'm a lecturer in business studies and accounts. Today we are going to discuss about VAT, that is value added tax. Now we are going to attempt a question here and we look at the solution. Now, let's go straight away to the question. Now, here we are told Nairobi stores deals in a variety of vatable and non-vatable goods. The following transactions took place in the month of December 2020. Now, these are the transactions that is from January, December 2020 up to 30th December 2020. Now date 1, that is the first day of the month, 1st December 2020, sold goods on credit to Wilton traders for shillings 200,000. 4th December, purchased goods on cash basis from Githurai 44 traders at shillings 100,000. Date 6, purchased, now this should be purchased, is a past tense, purchased electronic tax register, that is the ETR, for shillings 80,000. Date 10, Wilton traders return goods valued at shillings 50,000. Date 14, he paid electricity bills valued at shillings 7,000. 17th December, sold goods to MTN, a company based in Nigeria, for shillings 77,000. Date 18 December, received debit note of shillings 4,000 from Githurai 44 traders. 20th December, paid audit fees of shillings 7,400 to XR auditors and tax consultants. Date 21st, purchased office stationery from top printers at shillings 7,100. Date 22nd, supplied goods to the Ministry of Finance valued at shillings 1 million. 25th, paid shillings 24,000 for catering services. 28th December, purchased fuel for the business vehicles from Olivia at shillings 45,000. 30th December, imported goods from Beijing, China, valued at shillings 500,000. Exclusive of import duty of 20% and VAT of 16%. Required VAT account, that is number A, VAT account, then number B, VAT payable or claimable. Now, you are told that transactions are inclusive of VAT. Now, when you are preparing VAT account, note that the input VAT will be for the purchases and expenses, and it will be on the debit side, and then the output VAT will be for the sales. So that is the point number 1 that you are supposed to note when you are computing the VAT payable or claimable. Now, the next thing that we will have to note is that we are being told transactions are inclusive of VAT. And you say that where transactions are inclusive of VAT, we use this formula 16 over 116 times the gross amount. So that is our formula, except here date 30th, where the business imported goods from Beijing, China, valued at shillings 500,000, exclusive of import duty of 20% and VAT of 16%. So here the transaction is exclusive of VAT. So date 30th because you are told the transactions are exclusive of VAT, our formula will be 16 over 100. So these are the points that you have to note when you are preparing your VAT account. Now, let's go straight away to the solution now that we have the question. Now, the first date of the month, the business sold goods on credit to Wilton traders. Now, all sales will go to the credit side where we have the output VAT. Now, that is date 1st of December. Now, here you can see sold goods on credit to Wilton traders for shillings 200,000. So that will go to the credit side. You write the date 1st December, you write sales 16 over 116 because the transaction was inclusive of VAT, and we multiply by the gross amount. The gross amount is 200,000. Now, it is also important to note that where the business is purchasing the goods from, for example here, where is purchasing from, the seller must be registered for VAT. If the seller is not registered for VAT, if he is dealing with the vertible goods, then you cannot charge VAT. Now, that's just a by the way statement, but it's borrowed. Now here, you can see for us to complete the output VAT on this transaction, which was done on the first day of December 2020, we have taken 16 over 116 because the transactions are inclusive of VAT times the gross amount. The gross amount is 200,000 shillings, which is here, and our answer is shillings 27,586. Now we are through with that transaction date 1st. Now we move to date 4. Purchased goods on cash basis from Gilroy 44 traders at shillings 100,000. Now these are purchases. Now we have said that purchases and expenses will come on the debit side, and for that reason we will have to write the date 4th December, purchases 16 over 116 because the transactions are inclusive of VAT, multiply by 100,000 because that is the gross amount, and we get 13,793. We move to date 6, and that is he purchased ETR, electronic tax register. If you are dealing with the VAT, you must have the ETR. Now, he has purchased ETR because that is an expense, and expenses and purchases are recorded on the debit side of the VAT account. You take the figure, which is 80,000, is there the gross amount, and we multiply by 16 over 116. We get 6,897. That transaction was for date 10. Now we move to date 14. Paid electricity bill at shillings 7,000. Electricity is an expense, so expenses and purchases will come on the debit side. We write the date 14 December, electricity 7,000 times 16 over 116. You get 966. So we are through with date 14. The next transaction was date 17. Sold goods to MTN, a company based in Nigeria, for shillings 77,000. Now, here you have to know this, that because you have said sales are supposed to be on the credit side, we will not record that because these sales have been sold to a different country, not in Kenya. In other words, this is an export because they are selling to a company which is in Nigeria. So for that reason, it is important for the student to know that all exports are zero rated. So if you sell goods to a customer who is not within the Kenyan boundaries, you will not compute VAT on that. It's a zero rate. Even if you had to say 0% times 77,000, the figure will be a zero. It is even advisable for the purpose of the exam to post that figure here to show that you have charged a 0%. So you can put it there by saying, we can just write it here, there's nothing wrong with that. But mathematically, there will be no difference, even if you have to leave the figure. So if you have to write 17 December, and you write exports, that is exports, you write as 0. So exports will be a 0 figure because exports are 0 rated. That is why it is not appearing there. Now, we move to date 18. Receive debit note of shillings 4,000 from Githurai 44 traders. Now, a debit note is received when there is an undercharge, and this is being received from the supplier, because you can see date 4th, they purchased goods on cash basis from Githurai 44, so this is their supplier. And then date 18, the same supplier, they have issued a debit note to the business. So where you have received a debit note, that figure is supposed to go to the debit side. That is where you have written here, 18th December, debit note from the supplier, 16 over 116 times 4,000, 552 shillings. We move to date 20th, paid audit fees of shilling 7,400 to XR auditors and tax consultants. Audit fees and tax consultancy fees have VAT and their expenses. So now that the expenses, they will be posted on the debit side. Now, you get the figure here, 20th December is the date. Audit fee, 16 over 116 times 7,400, because that is what was paid to the auditors. 7,400, the answer is 1,020. From date 20th, we move to date 21st. Purchased office stationery from top printers at shillings 7,100. Now this is an expense. Stationery is the expenses. So the figure will come on the debit side. We write date 21st December. Office stationery 16 over 116 times 7,100, and the figure is 979. 979. Now, away from that, date 22nd, supplied goods to the Ministry of Finance, valued at shillings 1 million. Now, if you have sold goods to the ministry or to the government, those are sales. So the figure will be posted on the credit side because it is an output, it's to attract output VAT when you are computing the VAT payable or claimable. So we write here, either you can write the sales into brackets, Ministry of Finance, 16 over 116 times the gross amount, which was 1 million. 16 over 116 times 1 million is shillings 1,791, and we have posted that. We move to date 25th December. Paid shillings 24,000 for catering services. Now, ordinarily, you expect that expense to be posted on the debit side because it is an expense. But we have to realize that currently, now catering services is to do with the hotels and other catering establishments. Now what happens is that all hotels in Kenya and restaurants and the like, they pay catering levy of 2% of the gross sales. That should be done that way. If, for example, a business has made, an hotel or restaurant has made sales of 1 million, then it has to pay catering levy of 2% times the gross amount what they have sold. So we cannot tax this because this is a tax by itself. So this expense will not appear in our VAT. So that one will be omitted. And then we move to date 28 December. Purchased fuel for the business vehicle from Oilibia at shillings 45,000. Now this is an expense. So it comes here, fuel 45,000 times 16 over 116, we get 6,207. Away from that, we move to date 30th December. Imported goods from Beijing, China, valued at shillings 500,000, exclusive of VAT. Now this one is very important. Exclusive of VAT, of import duty of 20% and VAT of 16%. Now these are purchases because it is imports. Now the figure will be recorded on the debit side because it's purchases. This person is like being engaged in international trade. So these purchases are coming from a foreign country, Beijing, China. So we have to put tax on that. Remember, it is the exports. It is the exports which are zero rated. So that is not the case with the imports. So should not confuse between the two. It is the exports which are zero rated. That is not the case with the imports. When you import the goods, you will have to compute the input VAT for that. Now here, we can see here you are told that there is an import duty of 20%, which was excluded. So in this figure, the gross figure of 500,000, it is not having the import duty. So we have to compute the import duty on that. And then what we get, we multiply by 16 over 100. We will not say 16 over 116 like the others. You can see the other computations, we are using the denominator of 116. The reason being, all these transactions are inclusive of VAT. But here, with date 30th December, this transaction, we have been told, it is exclusive of VAT. So we need to know if the 500,000 was exclusive of the import duty. If we include the import duty, what will be the gross amount? So 20% times 500,000, then what you get, you multiply by 16 over 100. That is the same as 120% because the figure is exclusive of VAT, is exclusive of the import duty. So it's like saying 100% plus 20%, 120 over 100 times 500,000. So what you get, and I think we can calculate that here, which is the 120 over 100 times 500,000. We cancel that. We can compute that one and this one, and then we get 120 multiply by 5,000, so we get 600,000. So this figure is 600,000. So if you include the import duty here, you get 600,000, meaning 100,000 is the import duty. So for you to compute the VAT on that, it will be the 600,000 times 16 over 100, and you get 96,000. This figure here, the 96,000 is there. So that is the end of the transactions for the month of December 2020. Now that you have posted your figures in the VAT account, the next thing is to find the balancing figure. Now that you have the input VAT on the debit side, and this is the purchases and expenses, and the other side is on the sales, what you do is that you earn what you have on the debit side, and you also earn what you have on the credit side. Then you look at the balancing figure. Now if you earn these figures, this one, all these ones, you get 137,266. Then you earn these two here, you get 165,517. Now the balancing figure will be on the debit side because this is 165 and this is 107. The smaller figure will be on the debit side, meaning 165,517 minus 107,266, you get 288, that's 28,251 shillings. And because it is on the debit side, that is the VAT payable. Alternatively, you can say VAT payable, the VAT payable or claimable is equals to output VAT minus input VAT. In other words, we have said the output VAT, which is here, the 167,517 minus the input VAT 107,266, and our answer is a positive number 28,251. Now if the number is positive, it means that is a VAT payable. If it is a negative number, it means that is a VAT claimable. So our question was requiring us to prepare the VAT account, and we are given 8 marks. This is the VAT account. The student was supposed to prepare the VAT account, post all the input VAT and the output VAT, and establish the VAT payable or claimable, and then finally VAT payable or claimable, which is either getting the answer from the VAT account, or you just say the VAT payable or claimable is given by output VAT minus input VAT, and you get your answer there. So that marks the end of our lesson today. We will pick from there next time. My name is Mr. William.